When I buy things, I try really hard never to sell them. And so there's nothing you're going to do to convince me to sell my Bitcoin.
There's nothing you're going to do to convince me to sell my Bitcoin. Not a price target, not a timeline, not a recession. But this is coming from a Bitcoiner. Right now, millions of investors are doing the exact opposite. They're chasing, gambling, borrowing money, buying options, paying prices that only make sense if everything goes perfectly. This is why I think we're heading for the dot-com bubble 2.0 and why SpaceX is the poster child. Have you seen this chart? This is the S&P 500 from today, being overlaid on the S&P 500 from the dot-com bubble. Look familiar? In 2000, investors were convinced that the internet had changed the rules. They were right about the internet, but the NASDAQ still collapsed 80%. Today, I'm going to show you why we are in the midst of a dot-com bubble 2.0, why SpaceX is the loudest warning yet, why AI can completely change the world and destroy your portfolio at the same time, and most importantly, how you can make sure that this bubble doesn't force you to sell the asset that you never planned to ever sell, your Bitcoin. It's not just me. Two of the greatest investors of all time are also heading for the exits. This is Dante Cook with Bitcoin Simply. Let's go. All right, for as much crap as I've given SpaceX for being the poster child for the next dot-com bubble, they are hodlers. SpaceX owns 18,712 Bitcoin and Tesla reportedly owns over 11,000 Bitcoin. Combined, that would be over 30,000 Bitcoin, making them the fifth largest Bitcoin treasury company combined. But SpaceX can be smart enough to hold Bitcoin and still sell you their bags. People buying SpaceX right now are crazy. SpaceX trades at 94 times sales. That's 4 times as much as the next most expensive company on earth, 27 times more than Amazon. Every other trillion-dollar tech company right now is earning crazy profits. The market is asking you to pay the highest price for a company that is investing into future possibilities. The mark of a bubble is when investors act like the normal rules of valuation and cash flow and actually just good business practices don't apply anymore. And one of the greatest marks of a bubble might be when Jim Cramer enters the chat. Listen to him talk about SpaceX when asked about the valuation.
The Chinese targeted robots and they targeted cars. And when the PLA and the Chinese government get together, they can really wreck a lot of industries, as many working people in our country know. I think that Elon Musk will not tolerate that. And so therefore, I think that we're going to own space. This is a person who uniquely understands how important owning space is. And I think that I want to be with him. I don't care. And by the way, he has things in his head right now that are probably far more valuable than what we see and just hasn't articulated. That's the same thing that Jensen Huang, another genius, did. He had a lot of things in his head that hadn't been fully articulated that have been all coming true. I think there's more to this company than what's in the prospectus. And I think that, I don't know, personally, I'm proud. Proud to be an American today. I know to be reflective is sound almost silly because we're talking about pieces of paper, but I think this one is more than a piece of paper. I think this reminds me very much of when we landed on the moon and I realized that we had beaten the Russians.
Jim Cramer just said that Elon will single-handedly take down the Chinese government. And SpaceX going public is like us defeating the Russians or landing on the moon. But this is also Jim Cramer.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is really, look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly.
And 6 days later?
Okay, just so you get a sense of what's causing the agony by this point, I know you've been talking about it. It's financials led by Bear Stearns after what essentially is a bailout from the Fed. Bear Stearns shares are down 90% this morning, and it's not just Bear. Pretty much every single bank is plunging in early trade this morning.
I'm not saying SpaceX is Bear Stearns. I'm not saying the company is going bankrupt. And I'm not saying that reusable rockets are subprime mortgages with engines. I'm talking about the psychology that happens when we throw analysis out the window and go straight into worship. When your favorite companies and your favorite entrepreneurs become a religion of sort. And this happens every time. The 20 largest IPOs since 2006 have had an average drawdown of 61.8%. This is all in the first year. The 2 largest IPOs at the time also did precipitate crashes. The AT&T Wireless IPO in April of 2000, they raised $11 billion. You know what followed next? The dot-com crash. The Visa IPO in 2008. They raised $18 billion in cash, and that precipitated the 2008 financial crisis. These all became great companies and great technologies, but remember, at the time of the IPO, someone has to buy and someone has to sell. And the people that are selling are investors that have been in these assets and these names for 15 years with their capital locked up. It's early employees who got compensated with stock. Semiconductors related to SpaceX are also trading at valuations never seen since the dot-com bubble. 60 times price to earnings ratio on all of the major semiconductor ETFs. The concentration in tech stocks almost always precipitates a bubble. Right now, we're at the same level that we've seen during the Japan crisis, the 87 collapse, the Nifty 50 collapse. And speaking of Nifty 50, the last time that the Knicks won a championship was the Nifty 50 collapse. All of these things precipitate bubbles. When U.S. households are all in on stocks, things don't tend to go well. And right now, we have the highest concentration in stocks that we have since the dot-com bubble. History doesn't repeat, but it rhymes. American households now own a total 48% of their net worth in assets in financial stocks. What happens is people rely on the valuation of these stocks to prop up other assets and things that they want to purchase in the real economy. And this is why the Buffett Indicator is such a valuable marker. What is the Buffett Indicator? Well, it's signaling that everything is significantly overvalued right now. But the base equation is this. It's the ratio of the market cap of the U.S. stock market divided by the U.S. GDP. As of today, the indicator's at 230%. Basically, this means that the assets that people own far outpace the reality of the GDP and the growth of the U.S. economy. But wealth and money aren't the same thing. Wealth becomes money when you're able to cash that in for something that you really want or need in exchange. Ray Dalio talks about this, and this is why he says that AI is in a bubble. It's creating tremendous amount of wealth that can't be turned into money.
Nobody can get it exactly right. Okay. You have to either spend a ton of money to capture your market share and so on, and don't worry about whether it's too much or not, or you don't spend enough money and you lose your market share. And it's very imprecise with a lot of competition, okay? And then when people bet on the technology, which I'll bet on the technology, but they think that buying the stocks is betting on the technologies, which is a different thing because the stocks can be expensive and so on. That's a problem. And what happens is when wealth grows a lot relative to incomes, I want to distinguish wealth from incomes. Okay, wealth is, you can create wealth very easily in the following way. You say, I'm going to have raise $50 million on $1 billion valuation. Okay, that's counted as $1 billion of money, and now you're a billionaire, but you only put up 50 million. Okay, and so wealth, you cannot spend wealth. Wealth is, you have to sell wealth to get money because you can only spend money. So when there's a lot of wealth relative to the amount of money there is a vulnerability, and bubbles burst when wealth needs to be converted into money.
Well, what is the trigger for that?
Often that's because of debt, but it could be for anything. It could be for wealth taxes.
Ray Dalio talks about being able to convert your wealth into money, and he used the analogy of selling stocks. But luckily for you, if you've been storing your wealth and your value in Bitcoin, well, you don't have to sell. You can work with a partner like Ledn to unlock liquidity in your Bitcoin and borrow against your Bitcoin stack without receiving any capital gains. No taxes to the government, no paying the man. Just your Bitcoin allowing you to remain sovereign. You can borrow at half the rates of a credit card, and Ledn gives you the institutional grade and trust. They never lost a single cent or sat of customer money. Go to learn.ledn.io/simply to get started. Bitcoin also provides you the ability to have both money and wealth because it's something that you can protect and it's something that you can pass down. But you can only use the full benefits of Bitcoin if you're using all of its properties, like the ability to hold your own keys and to be truly sovereign. Work with the team at the Bitcoin Way. They'll teach you exactly how to run a Bitcoin node, how to own your private keys, and how to maintain your generational wealth beyond you to future generations. That's true wealth. Go to thebitcoinway.com/partner/Dante Cook to get started. A world-changing technology can be a wealth-destroying investment. Look at Micron Technologies. It took 20 years, literally until last year, for people to recover the losses that they suffered during the dot-com bubble in the first place. Like the dot-com bubble, many of these technologies will sustain and will be promising, but many of them are hyped up on fraud and are going to zero. Listen to this little clip from Ed Zitron.
Functional that coding is. But the biggest thing, by far, is that the con is the financial side. The con is the fact that most people's experience of AI is unrealistic when it comes to the cost. So you using ChatGPT, I believe the subscriptions will go away. I think we are just at the dawn of token-based billing, meaning that most people's use of Claude Code, for example, is based on a relatively unlimited, you can burn between $8 and $13.50 for every dollar of your subscription in tokens. So most people's experience of AI is separate from the cost, divorced from the cost. And this was a deliberate con on the part of Sam Altman and Dario Amodei, because they both knew that if they actually made people pay on a per million token basis to use these things, they go, wait, how much? Whoa, this thing messed up and I still had to pay. And you're kind of seeing that already with the enterprise customers, the Ubers and Walmarts of the world who are starting to have to pull back.
This is the token maxing, soul searching we're seeing going on right now.
Well, the thing is, Uber wasn't token maxing. I don't think they had a leaderboard. I think they might have at some point, but they burned through their entire annual token budget in 4 months, in the space of the first quarter. And then their COO, Andrew McDonald, said, it's getting hard to justify because you can't connect it to outcomes. We are years in. Why are we all acting like this is going well? It isn't. And so the experience of AI, the value judgments of AI are all based on phony metrics, an outright con about the costs.
The costs don't match the outcomes. We're consuming way too much compute, and we're putting way too much in investment capital into these products and not seeing real returns. This is pets.com all over again. Hyperscalers are going to spend 100% of their operating cash flows on these investments this year. So the important part is this. When the bubble pops, what's going to happen next? Here's my prediction. The government is going to have to step in and intervene. They're going to have to manipulate rates, just like they did at the original dot-com bubble. The too big to fail institutions won't be banks like they were in 2008. They're going to be the hyperscalers. And when that happens, the flow into safe haven assets, like it did in 2008, it went into real estate, it's going to be real. When the AI bubble pops, money's going to flow into hard assets, like gold, silver, and Bitcoin. I love showing people this chart of ground beef being up 77% since 2020. You cannot print cows like you can tokens. And they also can't print more Bitcoin.
I think what people don't understand here is that with a limited supply of 21 million and everything in the world ultimately denominated in Bitcoin, I would echo what Michael Saylor once said about it in a rather famous interview where he said, it's going up forever, Laura.
If you have the superior asset, it's going up forever, Laura. Forever.
Right. And it went from 1 to 10. It went from 10 to 100. It went from 100 to 1,000. It went from 1,000 to 10,000. From 10,000 to 100,000. The next step is to go from 100,000 to 1 million, and then it's going to go from 1 million to 10 million.
That's why I have my Laura bottle behind me. A lot of the investors in the dot-com bubble were right about the internet, but they still got destroyed. A lot of them were right about real estate, but many people who invested into real estate after the dot-com bubble got destroyed. The same thing is going to be true for AI. Don't chase assets that you don't know. Don't risk money that you need for something that you don't understand and you can't afford to lose. Spotting the bubble is only half the battle. Understanding what you do to maintain your sovereignty through the bubble is what matters the most. Liquidity is going to change, and it's going to move from one asset, which I believe is AI, into others. Are you going to be prepared? This money is going to flow into hard assets, and Bitcoin is going to move more than most people understand, which is what I go into in my next episode. Stay locked in, stay subscribed to the channel. This is Dante Cook with Bitcoin Simply. Happy stacking. And if you haven't already considered getting Bitcoin in more ways than just buying Bitcoin through spot, well, you should consider Saz Mining, the leader in Bitcoin mining. You give them money, they help you to find the right machine connected to clean 100% renewable energy sources and have sats flow directly to your wallet while you sleep. Use the QR code to get started with Saz Mining today. And with that, we're out.